Thank you for joining us for today's webinar, Startup Funding in Logistics. My name is Raghavendra, and I'll be in the background answering any of your technical questions today. If you experience any technical difficulties during our session, please use the Q&A panel found on the lower right of your screen to request assistance. Before we begin, I would like to invite our speakers to say a quick hello. Hello, Lizzie.
Hello, good afternoon, everyone. Nice to meet you. Welcome and thank you for joining us for today's session, Startup Funding in Logistics. My name is Lizzie Zhang, and I'm part of McKinsey's Travel, Logistics, and Infrastructure practice, and I will be your moderator today. Today's session will last for around 1 hour, and we will leave like 10 to 15 minutes for Q&A. We are happy to receive your feedback on whatever you are interested about, so we encourage all of you to submit questions throughout today's session. To do so, you can go to the Q&A panel at the lower right side of your screen, type the question, select all panelists from the drop-down menu, and click send. To preserve confidentiality, questions will not be read by our team only, and you will not disclose the sender. Any questions are welcome, so don't be hesitated to send them to us, and we will do our best to address each of them. Now, let me introduce you to today's speaker, Ludwig Hausmann and Tobias Wolfe. I will hand over to them to make self-introduction. Ludwig, please go ahead.
Good afternoon, good morning, everyone, from wherever you join. I'm Ludwig, I'm a partner based in Munich, Germany. I'm focusing most of my time in serving logistics companies across segments and have been leading our research this year into the startup funding in the space that drives a new wave of innovation. Happy to be with you today.
Tobias, my name. I work with Ludwig quite a lot, so basically focusing on transport and logistics industry. Have been part of the team that looked into startup funding, so a quite exciting topic actually, and a quite topic which is at the heart of what is happening today. So very excited to have you today. And again, as Lizzie said, please feel free to drop us any questions you have on our presentation throughout.
Cool, let's get started.
All right, Ludwig, to you.
Great. Well, let's kick it off. Startup funding in logistics. Our subtitle, New Money for an Old Industry, is quite speaking. If we move on to the next page, we see that obviously the transportation and logistics industry have been around for ages. What we see here on the page is a timeline starting back in early 19th century, that shows kind of an indexed development of transport costs at real rates, so taking out any inflation. And what we basically see is whatever mode of transport we are talking, be it ocean transport, rail transport, air transport, the real rates have only seen one direction, going down. And that going down is largely driven by innovation in the industry. Everyone knows innovation like containers that kind of hugely drove efficiency in the ocean transport, pallets that helped organize the road freight segment of transportation, just-in-time manufacturing and deliveries, kind of requiring networks of highly utilized high-speed transportation also helped unlock efficiencies. Then lately tracking systems, control tower operations, all of that contributed. And that has been a very long time. Now, in the last years, we have also seen a lot of news about startup funding. And what we, however, saw is that there was no holistic coverage of what happens in the industry when it comes to startup activity. So where is the startup activity from a geographic or segment lens? What type of innovations does the startup activity drive? How much funding over the years and across geographies is actually flowing into, and how different business models benefiting? So what we did was basically saying, let's look at all data sources plus our experience and interviews with our clients, corporate logistics clients, to understand what's happening in the space. So what we basically did in our analyses that you will see shortly is look holistically at $30 billion of funding, including seed, early stage, late stage, private equity funding going into new logistics ventures, which in total is more than 85% of all the money that flew into logistics startup fundings. Obviously, there are very small, very local companies that also get some VC funding, but we focused on about 200 startups that represent the lion's share of it all, and analyzed it from 4 perspectives. Over time, how does it develop? Then by industry or segment of logistics, by region, and lately what the COVID crisis had an impact on this. If we move on, this is kind of the first lens, which is a time series view. So what is interesting here is that in the early years of the last decade, 2010 to 12, 13, there was barely any logistics startup funding. And that against the backdrop of other sectors, such as software, such as consumer electronics and telecommunication, receiving tremendous amounts of startup funding already, and e-commerce and other segments. However, logistics then became en vogue. En vogue because 2014, the first of kind of the hyped logistics startups kept coming to the market and receiving great funding, serious money. And then 2015, 16, it's skyrocketed further. And then we had seen kind of not only an increase of a number of startups funded, but then especially 2018 and 19, the giant funding rounds kicked in, and companies like Flexport attracting rounds and valuations of beyond $1 billion, driving up the entire funding, as you see. However, so if you would want to just take a CAGR growth rate, it's 71% per annum, but that's probably not kind of really telling. And what you see quite recently is that it drops again, but that is quite in line with overall startup funding development. But in the years 2013 to 18, logistics startup funding by far outgrew any other startup funding in other segments. So that's what we see. One driver of the recent drop is also the less funding per round, not necessarily fewer funding rounds. So it's still the same amount or even more startups that receive funding, but just not as much to individual companies anymore. Now, and that's maybe a more interesting even, how kind of does the money disaggregate into different business models? So we have here come up with a number of 10, 11 business models that attract funding, and there's one clear winner, which is new last mile delivery models. Models that help basically e-commerce shops to venture into new service levels, on demand, instant delivery, or same day delivery, or even tap new assets and people to deliver services like crowdsourced courier networks. That has been the single most relevant source of fund or destination of funding. The second one went into the largest transport sector of all. The largest transport sector, as you all know, is road freight. And road freight especially attracted funding into marketplace business models and load matching business models, like Convoy, like Blackbuck. Then thirdly, also in the warehouse and logistics infrastructure for storage and fulfillment of goods has attracted quite a lot of funding, and most recently the trend towards micro fulfillment sites enabling same-day delivery has been quite up in the news, and that drove some of this development. Now, in more emerging economies, we also see new entrants in more classic parcel delivery businesses attracting quite a high funding, and that is exclusively emerging markets. We haven't seen any new parcel businesses in mature markets, but delivery in India or Ninja Van have been examples for the new entrants there. And then the fifth segment is air and ocean transportation, where we have seen things like rate comparison sites or booking platforms, or also, frankly, digital forwarders like Sport. And then we get into the long tail of funding destinations around contract logistics or tech features like asset tracking, e-commerce, special solutions, or intelligence providers, blockchain providers. But all in all, they received less of a funding, partly driven by the fact that investors have always been very excited about business models that are really customer facing, in a sense that either consumers or shippers, a large number of them, become direct customers of these companies, hence driving a broad adoption, whereas technology providers rather sell to incumbent transportation providers where there are just fewer potential customers and where they are just kind of subcontractors or suppliers rather than really kind of operators customer facing. And that was driving most of the difference. Now, moving on, a lens or zoom into Asia compared to global. So again across these business models. So in the new last mile delivery models, so the instant on demand, same day delivery companies, almost half of the funding went into Asia. That sounds a lot, but it's actually average. So across all segments, Asia attracted almost half of the funding. However, in other segments like road freight marketplaces or the warehousing part, or as I already mentioned before, new entrants in classic parcel business, Asia attracted the far majority of all funding. And that is driven by the fact that kind of the level of fragmentation and intransparency of, for instance, the road freight, or the lack of service levels in warehousing and contract logistics have been the starkest in Asia. So the basically improvement potential was highest, and therefore innovation was paying off there most, affecting most of the funding. And other segments like air and ocean, or also kind of the tech features like inventory order management, most startups rather come from mature economies. Moving on, we flipped it again and assigned all of the funding towards the kind of broad segments of the logistics industry. And that is, as we know, consisting of courier express parcel services, some small shipments, which kind of globally have a market size of $360 billion. And then, as I said, kind of the road, air, and ocean freight transportation. That is the by far largest market segment, 2.2 trillion. The storage and warehousing, 370 million, and tech features 45. And the interesting thing here is that these different sub-markets of logistics have different growth rates, and Courier Express Parcel, driven by the e-commerce boom, by far the highest. And the funding of startups isn't evenly distributed across the size of logistics segments. If that were the case, then transport would have, or freight transport would have had to attract most of the funding. But in reality, most of the funding went into express parcel courier services, hitting on the trend of e-commerce and the fast growth there, which was driver of unlocking funding. And that's probably the main message here. So funding goes into high growth business models in the large segments of logistics, where ideally the new business models have direct consumer or shipper exposure and can kind of win the customer interface. Good. With that, just a quick look at digital transport platforms across modes of transport, which are kind of probably the most vibrant field of startups next to last mile delivery startups, but also a very fragmented and multifaceted playing ground. And with that page, I'm gonna kind of explain it a little more. We try to bring a bit of light into the fragmented and as said, quite diverse picture here. So what you see is, first of all, on the x-axis, you have three segments. You have trucking transport platforms. You have transport platforms or startups that focus on one mode, either air or ocean in the middle, or you have a multimodal platform focusing on both air and ocean on the right. And then on the y-axis, from bottom to top, you see very simple business models at the lower end, where you basically focus on rate comparison and yellow page type platforms, where a shipper seeking information will just get kind of contacts and details on different trucking companies, for instance, available for his or her transport needs. Then if you move up, it becomes more sophisticated, where the platform really does order matching and is basically a digital marketplace. If you then move further up, complexity increases, where the digital players also offer brokerage and consolidation of smaller shipments into a full truckload or full container load. And then further up, you really have digital forwarders that are not intermediaries, in a sense that they will broker a contract between a shipper and a carrier through their platform, but rather are the transportation company for a shipper and will use, like a typical forwarder, subcontractors to actually perform this transport, but these subcontractors might not even be revealed to the shipper. That's kind of the second highest line here, and the highest line is then even more sophisticated, more into advisory and software services around supply chain management. And in that grid, you see a lot of the well-known logos, and you probably have heard about many on the right, Flexport or Porto, FourKites as a kind of visibility provider across modes and carriers. On the very left, the well-known trucking platforms like Manbang in China, Coyote in the US, and so on. And doing just one double click on the space of road freight platforms that is the highest penetrated in a way, also shows, and this is again broken down in the three different segments of just being a yellow page provider, serving or serving with true order matching, or even doing consolidation of smaller shipments. You see across different countries and Asian countries here up front, China, India, Indonesia, different models prevail and are the most common and successful ones. So in India, Blackbuck is a broker, but also a consolidator of loads, while in China, the pure load matching without consolidation and any further services is the most common model. And in the number you see here in each cell is the number of players active in the space, and the framed one cell is the dominating model. That is kind of a double click into road freight. I'm sure there will be questions in our Q&A sessions on these platforms later on, but I'll stop here and hand over to Tobias to talk us through a few more lenses that we took.
Yeah, thanks, Ludwig. So basically what we looked at so far was the time and the business model lens. What we want to deep dive now into is the regional lens. So what we have analyzed here is basically where does the funding go to in terms of where the startups are based. And what you see here is a early dominance basically of US startups that have received most fundings in 2014, and the share was even higher than this in the years before that, when funding was also still at an early stage. So with 60% roughly going to the US in 2014, the share has decreased to roughly 35% at the moment. And that has basically shifted, or that has come to the extent that Asia has caught up heavily over the past years, as you see here, the rapid involvement. And if we talk about Asia, it is mainly China that is now receiving basically something around 40 to 50% of venture capital funding in terms of the amount of money going into logistics startups. The rest of Asia is basically then India, and we see a large number of concentration as well in Hong Kong and Singapore, if you talk about Asia more broadly. Also strikingly is the very small share of Europe, with roughly 5% over the past years. So this is also something that might come surprising to a few of you, given the weight of Europe in global logistics markets and logistics companies based in Europe overall. And that is what we will deep dive on the next page, where we basically show how does this logistics startup funding compare to overall funding. And here we see that, again, Europe is disproportionately small, with 5 to 7% of funding going into European logistics startups at the moment. And this compares to a overall still small share of 13 to 16% of European funding for startups overall, so more broadly. So also looking across all sectors and industries, startup funding is to a lesser extent happening in Europe. But even considering this, it is striking to see how small the share of European funding is in logistics more broadly. You also see that Asia has a proportionally higher share in logistics funding than in overall venture capital funding. Again, showing how investors have captured on the idea that there is a big opportunity in emerging markets in Asia, where we see a few points that that make it more attractive from an investor lens, and that is basically the absence or the less presence of traditional incumbent 3PL companies and logistics companies also in the parcel segment in Asia compared to Europe. So there is a bigger fragmentation, a bigger market immaturity, if you want, which is always a good sign and a good place to be in if you're a startup. So that led to a higher share of logistics funding in Asia compared to overall venture capital funding. And you see the dominance of the US more broadly. Also interesting to see what we show here on the right side, again on the European side, is that Europe accounts for roughly 25% of global GDP, and the European logistics companies account for roughly half of all logistics revenues. So basically, due to the presence of the large 3PL incumbents and the large parcel companies in Europe. But despite the fact that this is the case, we see still less funding of logistics startups in Europe. Also, one point to consider here is that we looked at venture capital funding, so actual investor funding, and we didn't look at the investments of 3PL corporates into their own ventures, so into their in-house activities, which would drive up the share and the weight of Europe, or into other inorganic plays. So basically, something to consider here, but you see that basically Asia has gained a large share, and that is due to a bigger opportunity, a bigger fragmentation in this region compared to Europe and the US. Now we also looked at the impact of COVID in 2020, comparing it to the logistics segments where venture capital funding is flowing into that Ludwig described earlier. And we see an overall drop in 2020, which is a drop in logistics funding in 2020, which is in line with an overall drop in venture capital funding more broadly. So it's not just logistics, it's just a less risk and less investment appetite on the side of the global investors more broadly. And still we see a actually uptick in logistics funding over the last 2 quarters. So Q2 and Q3 are actually already higher than last year. And we read this week, some of you might have seen it, but there is a new round of a big funding happening in China at the moment. So this might as well drive our total funding up to a level that we might overcome 2019, and that is despite the fact that we are in an economic crisis due to the COVID spread. And why is that? So basically, what you see is also that COVID has brought a few shifts into how different logistics market segments work and how basically the dynamics shift between them. And what you see is that obviously due to the lockdowns, you see a bigger importance of e-commerce more broadly, and e-commerce logistics in particular. So you also see a slightly increasing share of B2B e-commerce specialists funding in 2020 compared to the years before. Obviously because e-commerce logistics has gained a lot of relevance during the lockdown. It is a market where the growth is accelerating. So we see actually that 2020 has led to an basically leap of 10 years of what e-commerce has gained in its share of the total retail spend. And that is obviously something that logistics cannot sleep on, and that is also what venture capital investors has discovered and what startup founders have discovered, and where there's a lot of dynamics happening at the moment. The other thing that we see is basically a bigger importance of supply chain transparency, a bigger importance of data across the logistics value chain overall, and we see a few startups which are focusing on that area as well. So basically providing intelligence and plugging together different data points across the value chain and making them accessible, and building an analytical service around that. And we see this as a key shift as well during COVID, as supply chain are being disrupted, as there's a bigger requirement to create agile supply chains and to create visibility across the whole value chain, especially during times where numerous transportation chains are disrupted by, for example, canceled cargo flights or ports being congested. So a bigger shift towards intelligence providers, and I think that is what we would expect also to happen going forward, to see more venture capital activity here. So basically business models focusing on providing transparency across the full value chain, and e-commerce more broadly. Now, basically, we have finished our overview of our analysis of venture capital funding in logistics across the four lenses: time, business model, region, and the latest COVID impact. What we summarize here is basically the key questions or the key takeaways from this, basically for different players across the value chain. And obviously, this depends a lot on where you currently are, in which bucket you are here. So we think as a basically supply chain manager, also as a customer of logistics services, venture capital and startups, logistics startups will play a bigger role in your supply chain setup going forward. And we see a lot of shippers actually already cooperating with startups to some extent and are eager to learn. So we summarized a few questions here, basically how you can ensure as a global organization to cooperate with startups in a way that you can ensure a roll-up of the solution globally across your organization and help the startup to scale with you as you go along. And obviously there's a big difference between the scale of the two organizations typically. Then very relevant as well are the questions for the incumbent third-party logistics providers. So there should be questions around where is my value proposition across the key dimensions that I serve my customers. So basically across my service offering, across my global presence, on the score of my customer satisfaction, and where would I be challenged by, maybe challenged, or where could I actually cooperate with startups across these segments and across these dimensions to close some of these gaps. How can I digitize and develop a internal digital strategy to compete with those players going forward and to keep up with the latest trend that these players introduce to the market. For startups then, obviously the question of how can you expand the scale while keeping an operational excellence that is an obvious key in this market, right? So we talk a lot about innovation and we talk a lot about new business models, but the operational reliability of the service that is offered to logistics customers is obviously the key requirement that needs to be guaranteed while focusing on expanding the scale. And then there will obviously be a question on the profitability on a unit basis. So is there a way to actually scale your business model in a way that you can achieve at least a positive gross profit contribution from what you're doing? And then obviously also for the startups, there's a lot happening, and we see a requirement to also stay flexible and agile as a startup, basically shift towards new or piggyback on new trends that also develop still going forward. So we see also a few examples of companies and startup companies that have shifted their business model focus over the past years and have done so quite successfully. And then for the venture capital investors, basically a summary of this as a takeaway, right? So where are currently still the most analog steps in the logistics value chain that are basically up for grab, where currently white spots are in the service offering of incumbent companies. And then since logistics is so intertwined, what are overarching partnerships that would lie out there? So are there opportunities to make startups, 3PLs partner with each other, as we also see that already happening across a few segments? So basically, an overview of key questions that we came up with. Obviously, this will depend on the various situations of each of the value chain actors to consider going forward. And with that, I want to wrap up our basically presentation here. As I know, we have also received a few questions so far.
Thank you. And yes, we do have a lot of questions here, and some of them are very similar to the final summary key question page. Okay, let's look at some of the questions. The first one is about what are the biggest hesitations for investors to invest in logistics companies? So, Ludwig, do you like to answer this question?
I mean, what are the biggest hesitations? Just spend half an hour talking about a huge amount of funding going into logistics. So it seems that kind of hesitations have decreased over time. But obviously, logistics compared to kind of its role for the global economy, almost amassing 10% of global GDP across all modes, is not attracting equally much funding. And one reason might be that it's just kind of a mostly B2B industry, where kind of the brand or the kind of customer experience and convenience and also being hip is not driving as much adoption as in the B2C environment, where just kind of the consumers are trending towards new things, cool things that attract obviously then a lot of funding. That is one. The other hesitation is that obviously the big transport and logistics companies have also, we've seen it on the first slide, improved efficiencies over the decades by quite a lot. So startups hit a market of well-oiled transportation networks across the world, which kind of not everywhere leave much room for kind of the entry of a small startup, because scale drives productivity, drives efficiency and bottom line in many of the companies, and startups by definition start small. So that might be a second hesitation. But overall, I also believe kind of it's not correct to say that there's a lot of hesitation. We see more and more willingness, and that is true for all stages of funding, early stage up to kind of private equity growth funds.
Yeah, I think one point to add here is just the sheer complexity of logistics. I mean, we showed it a little bit by our basically aggregation into business models, right? But the slight nuances of where to play and what to do in logistics are huge, right? And it is kind of not an easy thing to disaggregate this and make it basically logic for an investor what you are actually trying to do in this big market, right? I think on the one hand, attractiveness is obviously the big size of the market, 10% of GDP, you said it, Ludwig, plus a very like early stage of digitization, which makes it very much prone for startups to enter. But then on the I'm not sure if again hesitant is the right word, but on the complexity, you have a highly complex market, very difficult operations that need to be ensured, and an overall, let's say, lower profitability in incumbent logistics business models than what you see in other areas that venture capital attack, right? So if you think about SaaS markets also, where you already have really high margins from incumbent companies, that is something where you only have a few logistics companies that are able to do that. So I think it's a question also on how will the ultimate valuation of such ventures look at in the future, and what do you believe in that these startups fundings can achieve versus what other companies have done over the past years.
Cool. Thank you, Ludwig and Tobias, for the comprehensive answering. And let's see, second question. What are the emerging technologies that you see in logistics, especially in India? What are the white spaces?
Well, I mean, there are several emerging technologies. One is definitely a next level of shipment visibility door to door, and not only basically from pickup to delivery in one mode, for instance, a road freight transport, but really from door to door, and the real-time monitoring turning into arrival time predictions, and companies like Fourkites with their systems that integrate across carriers, across all shipments that a company has in flow at any moment in time. That allows for supply chain optimization quite a lot. We haven't seen that much of even though blockchain is a buzzword and seems to have kind of been trendy very much. We haven't seen much of investment there. And apart from kind of container ocean transport, where trade lanes and some others really have kind of used this technology, we don't see broad adoption of blockchain for that matter. So at the end of the day, it is kind of no rocket science technology, but just kind of really integrating it across different stakeholders along the chains, driving efficiencies, especially in the handovers. And then secondly, I think another step in e-commerce fulfillment is also waiting. So when we kind of think about e-commerce logistics as everything from click to the delivery, and then right now the part from kind of that is in the hand of a parcel carrier is already quite optimized and speedy, but the time from click to hand over to a parcel company, so picking, packing, dispatching, labeling, the inventory handling, that it deserves a lot of professionalization going forward. So that's probably also an area that will pick up.
Yeah, I was going to add, I think rather than one or two key technologies that are most relevant, I would also agree that it is rather the ability to basically step into a highly fragmented market, an early stage market, and optimize basically the operations and the value chain service offering across across the whole spectrum in India, right? And then there can be different technologies that are helping you to do that. But it is first and foremost basically a professionalization, a higher transparency of managing basically and orchestrating different processes in a market that is even higher fragmented than other markets that we see companies act in.
Cool. Thank you, Tobias. And also we have some questions who is very interesting about Africa market. And do you have any insights into the outlook for logistics startups in Africa, particularly in the last mile category?
Well, one truth is that less than 1% of current funding goes to Africa, maybe even close to zero. But obviously, e-commerce is picking up in Africa too. And sub-Saharan Africa is a very populous country where cell phone penetration, internet access has increased quite massively, will also drive a few of kind of the logistics innovations, be it last mile delivery and others. We haven't seen much yet, but I'm expecting. I mean, the challenge is obviously, and also these models benefit from scale and standardization across a certain market. And given African countries are so diverse, different languages, different preferences, and no one single market, not even South Africa, is so sizable that kind of a startup can have a realistic outlook of becoming a unicorn in just one country. That has probably been the barrier for more funding. But I think there's definitely more to come there. And Tobias, I don't know if you have any additional thoughts.
No, I think similar, right? So similar characteristics for Africa as for other emerging markets. So huge potential, obviously, with the difficulty of what you just said, having a very fragmented, basically, country landscape. I think what comes on top is that a few 3PLs are already well established in Africa. So that might also again lead, similar to Europe, to a fact where this might lead to a drop in the potential that startups see there. But there is definitely a potential also for these companies to venture with new startups and business models, especially those that try to overcome the key roadblocks of these markets at the moment, which is basically again like the high fragmentation, but also ones that focus on providing additional reliability for transportation chains in these markets, which is still quite one of the key challenges as of today. So reliability and transparency probably something to look at when thinking about logistics startup in Africa.
Well, thank you both. And also we have a question asking about what do you see the difference in funding for developing countries and the developed countries?
Well, yeah, I can keep that short. We see a disproportionate amount going into emerging economies, but that is mostly driven by China and India. Large countries, large markets with kind of consistent rules, but fragmented transportation landscape and intransparent and inefficient logistics are the prime source of startup activity, because there the most is to gain. So that is, but other than that, and a few differences I hit upon earlier, you have even very classic parcel delivery companies like Delivery in India popping up. This is something that we don't see in the mature markets. So a few different business models, a bit of a different mix in funding destinations, but most of all, a disproportionately high share of funding going to China and India.
Yeah, and I think what adds to that is the sheer size of these two domestic markets, right? So if you create a scalable business model for the US, you will be able to gain a much higher share, obviously, and much higher absolute size. And that is the same for China. And that is something that has hindered a little bit the big funding rounds in Europe, because you have to act across borders. Still, like, there is a European Union, but there are different languages, there are different cultures still, there are different type of customers, and different type of operations in each country, right? So to adapt to those takes time and takes effort, and it's not as easily scalable as a business model that focus just on one country, such as China and North America, which is why we saw these huge funding rounds, right? Also comparing China to the rest of Asia. But still, I think this will also shift towards other countries as we go along. We already see India as one that is picking up speed, and there might be a few other in Southeast Asia that are still sizable enough to create a business model that starts with one country and then gradually expands into others.
Cool. Thank you. And we still have a couple of questions. Another one is about what's the key reason for the transport category lagging in funding traction as compared to CEP, despite the former's significantly higher market size and a low level of efficiency?
Yeah, that's a good question. I think the main driver is still that investors look at market tailwinds. And as we have seen on this page, where we say, obviously, road freight transport is 4 or 5 times as big as, or even more than CEP. And here we see it. The compound annual growth rate in the past and also projected going forward is much higher in parcel and express, driven by e-commerce. And therefore, also venture funding wants to be not kind of where the biggest size is, but where the biggest growth is. And that kind of over proportionately benefits parcel services.
Sorry, I wanted to add that basically this aided the growth dynamics that you laid out. And I think it's also, if you look at the type of customers that you serve in these two first segments here, right? So you in CEP basically, or in e-commerce related markets, you also have a higher number of young companies that you can serve, right? So you would have a perceived higher willingness of potential customers for these startups in the CEP segment versus the traditional transport B2B segment, where you still have like a lot of traditional manufacturing companies that are used to their processes and service providers for the last decades. So I think it is also in terms of a story of serving new customers, emerging customers with new services, versus serving old customers with new services, which is a little bit more difficult. But also here, right? Also in B2B, you see that basically some of the startups are able to capture business from also the customers and companies in the segment which are new, right? So new B2B business model companies that also have transportation demand are often more willing to cooperate with logistics startups.
Cool. Yes, thank you. And the next question is, why is the funding into pure tech asset-based logistics startups considerably smaller?
Lizzie, can you repeat that into pure what startups?
Purely tech asset-based logistics startup.
Tech assets. Yeah. I don't know if that came across, but kind of my answer already earlier was these only serve transport and logistics companies, and there are many, obviously, but they don't control the customer interface. And what we learned in kind of the biggest unicorns, the biggest companies on the planet, you need to own the end customer interface, be it a consumer or be it a shipper, to be kind of a brand, to be exponentially growing. If you are only a tech asset provider, then you are a subcontractor of the main transportation or logistics company that has the end customer interface, but you don't have the end customer interface. That's the main difference.
Yeah, exactly. I think that is one, right? The business model aspect. So it is obviously more compelling to have a business model focus than an asset tech focus. And I think one thing that adds to that is the fact that there isn't this one technology that all of a sudden would disrupt everything. There are a number of technologies that can all gradually evolve into something very meaningful, but all in combination with traditional business models, right? So you wouldn't just have this one asset, whatever it is, that you put somewhere and then, magically rolls up the whole market. You will always need to plug an asset into a service offering and into a operational setup that is already being served to customers, right? So that is why you see a little bit of more like gradual involvement there.
Yes. Okay, we are a little bit running out of time. So last question. Last question is, how do you expect dynamics in VC funding to develop depending on economic recovery?
Bias, do you want to start with that?
Yeah, sure. So I think we will continue to see very, very big interest in CEP because of what we show here, the growth rate, right? And a overall still emerging logistics market in e-commerce. So if you think about omni-channel fulfillment, where we don't have a winner yet, or a clear concept that works. So there's still a lot to gain in CEP. And then I think also in the classical B2B transport segment, that is driven by trade. All right. So it will ultimately also depend on how trade recovers, but I think we at the moment see quite encouraging signs here. And then it's just a matter of where will the focus shift to. So we have seen a lot of money flowing into brokerage, kind of intermediary business models. I think we will see more activity in activities that are focusing, as I mentioned earlier, providing transparency and supply chain visibility as a key, basically, challenge that is still not solved yet. So I think there are the two main segments, and I think that is actually not so much depending on economic recovery, because both e-commerce and trade will fundamentally grow, right, no matter what.
Thank you, Tobias. Great. Thank you, Ludwig. And I think that's all for our today's session. And thank you all for participation. And thank you, Ludwig and Tobias, for the insightful sharing. Hope everyone brings something valuable back to home. Thank you. Bye, everyone. Have a nice day.
Thanks for the great question. Have a great day, everyone. Bye.
Thank you. Thank you. Bye-bye.